Hello students, I am Vipul Mittal, and in this session I will discuss misstatement. So you are the auditor and you are auditing the financial statements and you express your opinion on the financial statements, whether the financial statements are free from material misstatement. And you have to be reasonably sure that financial statements are free from material misstatement. What is this misstatement? It is a difference between the amount. So it is a difference. It is a difference between the amount, classification, presentation, or disclosure of a reported financial statement item and the amount, classification, presentation, or disclosure that is required for item to be presented fairly in accordance with the applicable financial reporting framework, that is US GAAP. So there's a difference between how management has reported and what is required under GAAP. So management prepares the financial statements. Management presents the financial statements. But if the amount, classification, presentation, or disclosure of an item that is reported in financial statements is not as per GAAP, then it is a misstatement. In simple words, you can say the amount, classification, presentation, or disclosure of a financial statement item is not as per GAAP. Here, the applicable financial reporting framework is US GAAP. So if the amount, classification, presentation, or disclosure is not as per GAAP, it is a misstatement. When the amount is not as per GAAP, it is a misstatement. For example, property, plant, and equipment is reported by management, but impairment testing is not done by management. Impairment testing was needed. Recognition of impairment loss was required, but management did not do that. And then management reports property, plant, and equipment, for example, at $900,000. This is the amount reported for property, plant, and equipment, but this is before recognizing impairment loss because impairment testing was not done by management. But impairment testing was needed. If management had done impairment testing and recognized impairment loss, property, plant, and equipment would have been reported at a lower figure, let's say at $740,000. This is the correct amount as per GAAP, but management has reported this at $900,000. This amount is not as per GAAP. There is a difference. There is a difference in the amount that is reported by management and the amount that is required under US GAAP. This is a misstatement. Property, plant, and equipment is misstated. All right. If the classification is not as per GAAP, for example, sales are not recorded in proper account, inventory is not recorded in proper account, correct account name is not used, classification issue, there is a misstatement. If presentation of a financial statement item is not as per GAAP, it is a misstatement. For example, results of discontinued operations is required to be presented as a separate component of income on the income statement. As a separate component, it has to be presented. This is what is required under GAAP. But management does not present results of discontinued operations separately. Presentation issue. Results of discontinued operations. It is to be presented separately on income statement, is not presented separately. This is a GAAP issue. Presentation is not as per GAAP. It is a misstatement. If disclosure is not as per GAAP, it is a misstatement. So there is an error in disclosures. For example, management has incorrectly described property, plant, and equipment that is impaired, or some of the disclosures are missing. Management has incorrectly described the facts and circumstances resulting in impairment. Disclosure issue. Disclosure is not as per GAAP. It is a misstatement. Now, this misstatement may be due to a fraud or an error. For example, management omits to report certain expenses. So certain expenses are not reported by management. But it is a mistake. It is unintentional. It may be because of software issue, IT issue, or an error from accounts executive, or for some other reason, but it is unintentional. Errors do happen, but it is a misstatement. So misstatement may be due to an error, unintentional. I give you another example. Management spends $80,000. This should have been expensed, but management capitalized this amount. So this is an expense, and management should have expensed it. But management intentionally capitalized this and reported it as an asset. This is a misstatement. According to US GAAP, this should have been expensed. But management intentionally capitalized this to overstate profits, to increase the profits. This is a fraud. This is a misstatement. This is also a fraud because this is intentional act that results in a misstatement in financial statements. Another example, management records fictitious sales. Fictitious sales are reported. Fictitious journal entries are recorded. Gap issue. It is a misstatement. It is also a fraud because it is an intentional act by management resulting in a misstatement. Management records fictitious journal entries. Management makes misleading disclosures. It is a fraud. So a misstatement may result from a fraud or an error. So if the amount, classification, presentation, or disclosure of a financial statement item is not as per GAAP, it is a misstatement and it may be due to a fraud or an error. All right, students. I hope this session was helpful in understanding misstatements. We'll connect again. Goodbye.